all vehicles that have a less than 3% or a 0% APR offer on it currently. As of right now, the proportion of vehicles that have a less than 3% APR rate on them rose up to 12.1% in August. We touched on this in previous months. Factories have not been very forthcoming with incentives. We did see that move up a hair in August. We'll see how September looks. I would anticipate really these may start to regress a bit. And I wanted to also, looking at the average auto loan rates, overall, you can see the new average auto loan rate, used average auto loan rate. Really, these have been kind of steadily grinding higher throughout much of this year. They've been pretty consistent. With the Fed talking about cutting rates, will we expect to start to see these start to decline and ultimately see lower rates? We may start to see that as early as about a week or so when the Fed meets. Steven, anything to add there?
Yeah, I have one thing I'd like to say. I'd like to put myself out there here. I've done it once already. I'm going to do it one more time. I believe that going into the end of Q4, that all of a sudden the factories are going to blow out when it comes down to interest rates, offers, etc. I believe that December is going to be a December to remember. Do I have December to remember patented or trademarked in any way? Absolutely not. But with that said, I can say it might be a December to remember. All right, so just keep that in mind.
And with that, I'm going to also make a little prediction here. I believe that in order to have a December to remember, factories are really going to need to be the catalyst for that. I think that with where the Fed is at, we're likely to see a 25 pips cut coming up here in about a week. But then after that, who really knows what's going to happen? I think if these factories want to provide support to the consumer, they're going to need to do it. They're not going to be able to rely on the Fed to ultimately improve that demand from a pricing and rate standpoint.